Hi all, welcome to this tutorial. In this tutorial, we are going to discuss about the internal uses of financial statements. In the previous discussion, we already discussed about different uses of financial statement, which include internal uses and external uses. So in this today's session, we will have a detailed discussion about internal uses, who are the internal uses, and why they are interested in the financial statement, which area, what is they are looking into the financial statements. So in this today discussion, we are going to cover all these about internal uses of financial statements. Internal users, who are the internal users? Internal users are the users within the organizations, which can be the management, orders, employees. These are all the internal users, or they are from within the organizations who use the financial statement to make operational and strategic decision making. These users have access to detailed internal financial information beyond published statements. Normally, when it's compared to external users, internal users might have more access to financial statement and other financial information into the company when it's compared to external users. So the learning objectives of today's session is to identify the internal users of financial statement, just to list out and identify who are the internal users of the financial statement. And the second objective is explain how managers use financial information to make their various decisions or in their working process. The third objective is to understand the role of financial statement in planning and control. How the financial statement is helping the management in the process of planning and control. Then apply the concept in managerial decision scenarios. How a financial statement can apply, or a concept can apply in the managerial decision making scenario. So this is the learning objectives for today. So we are just going to understand who are the internal users. The first internal users are the management only. Their role is to make strategic decision making. The management who managing the business has to make various strategic and operational decisions. So the financial statement provide them a understanding or some insight to make this decision, and which can help the develop and improve the business process. Then the employees. If I'm an employee, what I'm looking for, I'm looking for my job security, my salary, my bonus, my packages. So when a business point of view, all these things is well connected with the company's profitability and company performance. So the employees are well interested to see the company's performance and the financial record to evaluate whether their job is secure, what is their expected outcome or the expected package, salary or bonus they can expect from the company. Then the internal auditors. Internal auditors, they want to ensure that proper internal controls are in the place. So they are also interested in the various financial statement and various reports. Then management as a key internal user. As we said, management is a key internal user of financial statement. They are using the financial information to make various strategic and operational decision making process. So their key users or use financial information to, their key users are first one to evaluate business performance. How the business is going, whether it is profit is improving or sales is improving, what about the cost structure. All this information will reveal with the financial statements. So first thing they are interested to see the business performance. Then second thing is about the cost control. How the cost element is improving, how the cost of goods sold is improving, how the employees cost or employee expenses are moving, how other operational expenses are moving, how the sales and marketing expenses are moving. So all these things will reveal some insight into the internal management to make various decisions and to see how the cost is behaving and to make some initiative to cost control. Then the make investment decision. Financial statement will reveal the return potential or expected return from the investment. So which will definitely help the management to make various investment decisions. Then the plan future operations. Financial statement will help the companies to prepare the budget and planning process. So which will help the plan the future business operations and expansion plans. Then how the financial statement uses in planning? Planning involves setting the future goals. Examples for planning decision include production target, expansion plans, pricing strategies. So management use financial trend and historical data to prepare the budget, to control the budget, and to make various variance analysis. So this all will help the companies to make in the process of planning and the budgeting. Next thing is the budgeting. The budgeting is one of the important things where the internal management can depend on the financial statements. Suppose all these elements like the sales, expenses, or these are behaving to the management can see how it is behaving from period to one period to another period. Or by referring the financial statement, management can understand the trend of each element, including sales, cost of goods sold, operating expenses, other administration expenses. They can see how it is moving, and that movement or that trend will help them to prepare the budget for the future period. Then uses in the controlling. In a real business case, there will be a budget and there will be an actual or actual financial results. So this actual financial result help the companies to compare it with the budget and to see whether is there any gap in the budget and is there any gap between the budget and the actual results. Suppose for the January, I planned 2 million sales. I achieved 1.8 million sales. So there is a gap of 200,000. So this comparison will help the management to investigate that gap and to make the decision related to solve that gap or to solve that issue. Suppose there is an actual profit, the company is suppose budgeted 1.5 million. Sorry, the budgeted profit is 1.5 million and the actual profit is 1.2 million. So there is a variance of 300,000 profit in this case. So by revealing this gap or this variance, the management can investigate this case and to mitigate this situation. So let's move into next user, that's employees. Employees are analyze the financial health to evaluate first thing their job security, company stability, bonus potential. All these things where the employees are interested to evaluate the company's performance or the financial statements. For example, employee may expect bonus when the company report a strong profit. In some cases, if the company report a strong profit, the employees can expect a bonus. So all these things related to for their job security, company stability and potential to evaluate the company's potential or bonus potential. So employees are very interested in the financial statements. Then for the internal auditors. Internal auditors, they want to ensure the financial accuracy, compliance with the policies, fraud prevention. So the financial statement is help them to detect the irregularities in any categories like any expenses or any income. This will help them to evaluate, the financial statement will help them to evaluate is there any irregularities in the financial reporting and to mitigate that risk in advance. So that's why the internal auditors are interested in the financial statement. So here we discussed about the three major users. The first one is management, then the employees and the internal auditors. So let's look into this case. A manufacturing manager is considering expanding production capacity. So the current financial statement reviews show there is a sales growth of 20% and the operating profit margin is also increasing. So based on this information, the manager can approve the investment in the new machine because there is a clear sales growth of 20%. That means the market is expanding and the operating profit margins is increasing. That means this product have real profitability. So based on these two insights, the manager can decide to invest in the new machines. Let's look into this case. If production costs suddenly increased, which financial statement would help the managers to identify this issue? Definitely it is income statement, because the income statement report the total income and expenses for a period of time. So if the production cost suddenly increase, the management has to review the income statement to mitigate this issue or to identify this issue. So let's move into practice question, multiple choice question. Which of the following is an internal user of financial statement? Investors, government, managers, and bank. So this is managers. Managers are the internal users who are using financial statement. They are working or they are within the organizations. So this is about today's discussion. So just a quick summary before winding up. Internal users operate inside the company. Internal users are the users. They are operating within the company. They are using the financial statement for various purposes. The key internal users are managers, employees, and internal auditors. These are the key internal users of the financial statement. Financial statement supporting the process of planning, budgeting, and performance control. These are the some areas where the financial statement support the management, where in the process of planning, budgeting, and the performance control. So this is about this discussion. If you have any doubt or you need any clarification on any of these topics, please ask me on the comment section. Thank you for watching this video.